The FTX fallout continues to send shockwaves throughout the crypto industry. The collapse has left an estimated 1 million creditors facing losses totaling billions of dollars. Some of the biggest players have been embroiled in the chaos. The latest casualty seems to be Genesis, which is reportedly looking at filing for bankruptcy. The SEC and the U.S. Justice Department have launched investigations into FTX, and the U.S. Senate will also be holding a hearing in early December. Now, this chaos will clear the way for regulators to march in with ferocity. Bitcoin is now at a 2-year low, while the total crypto market cap has fallen from just over $2.9 trillion to $823 billion. And it's creating the sense that crypto winter is about to get colder and darker. So just how ugly could this contagion get? And what does it all mean for Bitcoin? Well, joining me to discuss this and more is Cory Klippsten. He's the CEO and founder of Swan Bitcoin, a Bitcoin-only financial services company. Now, Cory, in fact, sounded the alarm on FTX while SBF was still hailed as the golden boy of crypto. Cory is a partner in Bitcoin Ventures and Elzonte Capital. He serves as an advisor to the Bitcoin Venture Fund and as an angel has funded more than 50 early-stage tech companies. And before startups, Klippsten worked for Google, McKinsey, Microsoft, and Morgan Stanley, and earned an MBA from the University of Chicago. Cory, thanks so much for joining us here on Kitco.
It's great to be here. Thank you so much for having me on, Michelle.
All right, so Cory, let's unpack this FTX saga. It's a fast-developing story. But SBF reportedly used $10 billion in customer funds to prop up his trading business, Alameda. $1 billion of that has now vanished, with speculations that SBF stole it via a backdoor that he implemented in the company's software. He's still in the Bahamas, and we're learning from lawyers during the bankruptcy hearing that FTX was in fact run as SBF's personal fiefdom, with about $300 million spent on real estate for SBF and his friends and family. Now, you sounded the alarm bell on this a few times in several tweets and several interviews, including the CoinDesk interview where you said, and I quote you here, "It's fascinating to see that the majority of the net equity in the Alameda business is actually FTX's own centrally controlled and printed out of thin air token." Of course, you're referring to FTT there. And I understand that reporters at CoinDesk sent you the balance sheet for you to take a look at and analyze, and you flagged the FTT issue. So give us a quick recap of what exactly happened here.
Yeah, that's exactly right. So dating back to June, when Celsius blew up and Voyager and some of these centralized financial institutions, I guess, in the crypto space were blowing up, there was a big PR push made by Sam Bankman-Fried, scam bankster fraud, as we like to call him in Bitcoin, and his PR machine, essentially saying that he was the white knight of crypto, that he was the JP Morgan of crypto, that he was going to come and sort of save the industry. And I tend to like to look at what people do and think about why they might be doing that rather than sort of listening to what they say. And it seemed very clear to me that the only reason somebody would be doing that is if they were trying to backstop losses, that he had exposure to these firms and probably blew a hole in his own balance sheet. So that's what I started saying and sort of asking questions about that on Twitter and on multiple TV appearances dating back to June, July, August, all through the summer. And obviously some of those were on CoinDesk, and I got to know their editorial team through multiple appearances on CoinDesk TV and articles, and helping them out and kind of poking at this false narrative around Sam Bankman-Fried. And yeah, when a source passed Ian Allison, one of the editors over at CoinDesk, this Alameda balance sheet, he got in touch. He sent me the balance sheet. We went through it together. You know, I have a lot of experience going through balance sheets and kind of poking holes in things. And yeah, that became the article. And then, of course, that snowballed a day or two later when CZ from Binance saw the door sort of wedged open and took a battering ram to it and kicked it down by saying he was going to sell over $500 million worth of this FTT token on the open market. And that was pretty much lights out. Again, because it was fraudulent. Like if he actually had the customer assets on FTX like you're supposed to, if you're running an exchange, you're actually supposed to have real assets trading, not just fake things. This fraud was only going to get bigger if it didn't get exposed now.
Right, and it's absolutely massive now. The fallout from this is incredible. There is, of course, the issue of contagion and huge implications for regulation. But let's start with the contagion angle. It is extensive. According to crypto fund research, somewhere between 100 and 150 crypto hedge funds could have direct exposure to FTX or its token FTT. And by CFR's calculations, the affected firms, which include Genesis and BlockFi, have an average exposure to these funds of between 7 to 12% of their total assets under management. So, Cory, give us a sense of just how big this is and what could be the next domino to fall.
Yeah, it's one of the really interesting things about this story is FTX was pretty much the preferred trading platform of the professionals. So meaning all these crypto funds and crypto VCs that have spun up over the last 4 or 5 years. And so they are the ones that were not only using it as a trading platform, but in many cases using it as their custodian as well. So we saw a Los Angeles-based, fairly well-known fund blow up because they had 99% of their assets on FTX. We saw a really solid fund out of Texas that's pretty well-known, had 40% on there. It looks like Multicoin Capital, another fund out of Austin that's sort of one of the biggest, best-known kind of crypto pump and dump shops in the world, had about 50% of their assets on FTX. So they're kind of blown up at this point. So yeah, it's really fascinating. You don't hear very often about retail traders having accounts on FTX, at least in the United States. It's just not that common. FTX US didn't get very big, and FTX US supposedly so far is not impacted by this anyway. It's kind of ring fenced. So yeah, this is kind of a US crypto fund and global crypto fund blow up, and a lot of international folks getting blown up.
Do you think we've seen the worst of it? Do you expect Genesis to be the next domino to fall here based on what we're hearing? They're reportedly looking to file for bankruptcy, reportedly. What do you think happens next in this mess?
Yeah, so nobody has passed me any secret information, but I can synthesize what I've been hearing, secondhand and through groups that I participate in and things like that.
No balance sheets to analyze have been given to you about any of these players.
Exactly.
All right. Okay.
Yeah. We haven't seen the end of it. We may have seen the worst of it. What I can surmise, and again, this is just a guess, I don't think we know the full truth because nobody tells the truth as they're struggling and trying to maintain confidence in their financial situation in the crypto space. But from what I can surmise, they have a hole on their balance sheet, but it's not the whole thing missing like it was with Alameda and FTX. So even if they have a hole of, maybe it's even double or triple what it is, that wouldn't be nearly the size of the hole that was blown in the balance sheet of Alameda. And so there would be a process that you could work out, and people would have much less exposure to that than what you have seen with FTX. So, yeah, I think you'll see rolling, basically closures and admissions that funds were blown up, but a lot of those will just be on the quiet. Only if you happen to know some limited partners of a lot of these funds, like the ones in the group that you just mentioned, would you even find out about it. But yeah, I think this will roil through over the next 3 to 6 months, maybe even longer. I mean, if you think about it, Alameda probably blew up in May when Luna went to zero. Luna and UST went to zero, basically May 9th. That's probably when they blew up. And that's when the big hole in their balance sheet got created for the most part, or accelerated. And they've been trying to figure out some way to escape and get back to whole, probably by trading with leverage and using their clients' funds to try to trade their way out of the hole. That's what a lot of these other funds will do. They're not regulated. Nobody's looking. And it's very opaque what they do and what their positions are. And a lot of them that have holes in their performance are going to try to get back to their high water marks, and they're going to try to trade their way out of this with risky bets with lots of leverage. And, they'd rather go to zero than be down 50%.
Well, they're not regulated yet. We'll get into the regulation question now. You mentioned Luna and UST. You also called those collapses correctly. But before we get to that, I wanted to discuss more about the contagion impact here, because you do have a lot of this fund capital, this VC capital now being sucked up and not able to be deployed in the crypto industry at large. I know your focus is Bitcoin. You're a Bitcoin-only financial services company for reasons we'll get into as well. But how do you see this contagion impacting Bitcoin and the Bitcoin ecosystem?
Yeah, I mean, I think a lot of people in the mainstream media and people kind of even looking from outside are starting to realize the truth that Bitcoin is not part of this non-Bitcoin crypto industry. I think they're also starting to realize that crypto VCs aren't actually performing the role of venture capital as traditionally understood. They're much more like penny stock hucksters, and basically only exist in this brief moment in time where we have information arbitrage and regulatory arbitrage, and they're essentially able to get this short time to liquidity and be able to sell out of their positions while marketing these things however they want to. You can say literally anything about crypto blockchain magic for anything you want to, as long as you can get dumb institutional and retail to buy it and get you out of your position and make you some profits, book those profits, and then go raise another fund. But this is not actually venture capital. I just want to make that very clear.
Okay, but what is clear is that this has impacted the sentiment regarding Bitcoin and the price regarding Bitcoin. We know that Bitcoin is down, about 76% from its all-time high of nearly 69,000. And you mentioned institutional investors. They were supposed to come in and push the price of Bitcoin higher. So sort of in the short term, how do you see this impacting the Bitcoin market?
Yeah, so I think we Bitcoiners are totally happy to take short-term price hits and have Bitcoin for sale, well below what we think its actual value is or the path that we think it should be on. If it helps wash out some of these scamming business models and some of these unsavory characters and business models around Bitcoin, that essentially we call it orange washing, borrowing from corporate greenwashing. So you're basically saying like, I love Bitcoin, buy my altcoin. That's kind of orange washing variety of marketing. And so, we celebrate these players washing out of the ecosystem and the education that comes for the general populace, recognizing the difference between Bitcoin and crypto.
Okay, well, we will get into your long-term outlook for Bitcoin and price predictions further, but I want to focus a little bit more on the regulatory impact. Yeah, of course, that is a big issue. We're just hearing today that US lawmakers now want to exclude cryptos, including Bitcoin, from retirement funds. Some Democratic senators, including Elizabeth Warren, want Fidelity, for example, to stop allowing Bitcoin allocations to retirement savings and 401ks. New York's Attorney General Letitia James, she is pushing particularly hard for this. She wants Congress to craft legislation that now prohibits crypto or digital asset investments in any defined contribution plans and individual retirement accounts. What do you expect there? It seems like that's the lowest hanging fruit at the moment to target the retirement funds and such. What do you expect there?
Yeah, that's an interesting development, and I can't really blame them given how the crypto industry has marketed itself and tried to be in bed with Bitcoin over these past few years and jam crypto, meaning Ethereum and Cardano and Ripple and all this other stuff, into these portfolios of retirees. I mean, it's truly scandalous. And so, yeah, I'm not surprised at all that the regulatory hammer is not necessarily selecting the correct nail to hammer and is just coming after everything, because that's been their goal is to try to group these things together. Bitcoin is the only commodity out of all of these. It's the only thing that isn't centrally controlled. It's the only one that doesn't have an issuer, right? And if you have an issuer, then according to US laws, then you are a security. So what's really interesting, so we'll see what happens with this legislation, and I'm pretty hopeful that there's actually enough representatives and senators in activity that's Bitcoin only at this point, especially after the infrastructure bill, when the Bitcoiners realized that the crypto lobbying groups didn't have Bitcoin's interests in mind. And so a bunch of new lobbying groups that are Bitcoin only spun up in 2021. after the infrastructure bill fight. So I think we actually have enough voice in Congress to be able to make the case and separate Bitcoin from all the cryptos. What's more interesting here, I think, is this long arc of the last couple of years with a very concerted effort from the largest players in non-Bitcoin crypto. So this would be Coinbase, this would be the Ethereum Foundation, Consensus, Paradigm, which is Fred Ehrsάμ's fund that's the co-founder of Coinbase, and Andreessen Horowitz in particular, spending so much time in DC and frankly, allowing Sam Bankman-Fried to do the lion's share of the talking because he seemed like the right poster boy. He showed well on TV. He did these meetings. He's the MIT guy. His parents are, compliance-focused Stanford law professors. They give hundreds of millions of dollars or raise hundreds of million dollars for political action committees. He was a huge donor, obviously, in the last election cycle and the current midterm election cycle. So essentially, the whole non-Bitcoin crypto industry kind of let him take the forefront. And the goal of all of these players on the non-Bitcoin crypto side is to wrest oversight of crypto away from the SEC and put it with the CFTC. That's been their goal all along. And so the carrot that's been dangled in front of the CFTC is, hey, wink, wink, regulate us with a light hand, and you can charge us whatever fees you want, and you'll be super powerful and you'll be rich. Just please, 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 please don't let the SEC apply the rules that are already on the books to our crypto securities.
Well, that is certainly not going as planned. We'll see how that plays out. But you're saying that you think lawmakers will differentiate between Bitcoin and other assets when it does come to these regulations that are bound to start solidifying now.
Yeah, Bitcoin has been very clearly understood since 2014 as a commodity according to the CFTC and as property according to the IRS. That's not going to change anytime soon. And so I think you'll see reason win out in the end. There's a lot of work to do to help legislators understand the difference between Bitcoin and these cryptos and understand the difference when someone can issue and control the money supply of these altcoins and change the code whenever they want. It's something very, very different from Bitcoin, which is decentralized and immutable and has no owner. So I think you'll be able to make that case. It's already in the congressional record from a few years ago. One of the reps saying, so there's Bitcoin and there's, I won't swear, so I'll say, and shipcoin. So there's okay. Bitcoin and there's shipcoin. Right. So there are people that actually understand the difference in DC. And I think we just have to do a lot of work over the next few months on the Bitcoin side to separate the two in the minds of legislators.
From a Bitcoin regulation perspective, what concerns you most in terms of what we can expect from regulators now? Even if they do differentiate Bitcoin from other cryptocurrencies, what regulation that may be likely concerns you the most?
Yeah, I mean, I can't really imagine any sort of, Rule 6102 from 1933, boots on necks confiscation. That would be a very different, dramatically tyrannical America. And I think we'd have a lot of other problems and some kind of revolt before you get to that point. So sort of the doom scenario, I don't actually see happening. So in my view, it's basically at the margins. I think you'll basically maybe see something come around about, it can't be in this type of account or that type of account. Or frankly, the wise thing to do for any state really would be to ban any of these pension funds from investing in these crypto venture funds. I mean, I don't think that teachers of Texas or, CalPERS participants really want to be involved in these scams. I really don't think that's what they want to do. And so I think LP pressure on the VC firms and saying, hey, Andreessen Horowitz, hey, Sequoia, we don't want to be in this business of scamming the heck out of people and ripping their faces off anymore and lying to them about crypto blockchain magic. I think that's going to be where the pressure comes from. And, it'd be great to see the market solve it that way and not have it to be at the regulatory level. But we'll see if people actually wake up and understand the scam that's been going on for the last 5 years.
Okay, so you're certainly not mincing your words when it comes to all other cryptocurrencies. A scam, a Ponzi scheme, terms that you've used before. And again, you try to say that you hope regulators won't lump Bitcoin along with crypto. But Bitcoin naysayers have used the term Ponzi scheme and the term scam to describe Bitcoin. So make the distinction. Why is it different to call Bitcoin a Ponzi scheme as opposed to Ethereum or other cryptocurrencies, for example?
Sure. So Bitcoin is quite simply has the best characteristics of money, of any money that we've ever had as humans on this planet. So, and it's also very difficult to theorize how Bitcoin could actually be better money. And so the very likely outcome is that Bitcoin continues to grow in size and market cap and price and purchasing power over the decades and become global money. It will probably eventually, in the long run, replace the dollar. That could be many decades, could even be next century, but that's probably what's going to happen. And in the meantime, it will live as a strong global reserve asset. You'll probably see, in 10, 15, 20 years, you'll see two prices on goods and services. You'll see it, yuan and Satoshi's, the unit of Bitcoin, the smallest unit of Bitcoin. You'll see dollars and Bitcoin prices, things like that in the next few decades. That's very different from what's going on in the altcoin space. None of these altcoins can become money. They all have issuers. They all have unfair, unjust distribution, and again, are controlled by small groups of people, unlike Bitcoin.
All right, Cory, but just to play devil's advocate here, Bitcoin does rely on the network effect of more people coming to this understanding, as you say, that Bitcoin is superior money, and purchasing more Bitcoin and bringing more and more people into the network. And increasing adoption of Bitcoin is vital to its long-term success. And you have people like Peter Schiff, who has been very vocal against Bitcoin, calling it a Ponzi scheme, claiming that it relies on the greater fool theory. Now, we did have a debate on Kitco between Peter Schiff and Alex Mashinsky on whether Bitcoin is digital gold, gold 2.0. The debate was on whether Bitcoin was a superior form of money or store of value. Now, to be clear, the debate was not about Celsius. Alex Mashinsky was representing the pro-Bitcoin case, but the debate wasn't about Celsius and its future and its business model, but the debate did drift into that direction a few times. And Peter Schiff has been taking a victory lap since the collapse of Celsius, saying that he was right. And when it comes to Celsius collapsing, he was indeed right. But as far as the bigger picture, the debate on Bitcoin and its use case and its future, and that it's a superior form of money, as you contend, and a store of value and a medium of exchange, so forth and so on, well, Schiff has not been right on that, at least so far. Now, certainly with regards to Bitcoin's total collapse and going to zero, which he contends will happen, it's very premature to call victory there. He may be right, we'll see, but hasn't happened yet. But he has been correct on this idea of leverage in the system and margin calls and the impact that that has. So I want to play a clip from our debate and get your response. Let's watch.
Bitcoin is going to crack. Maybe once it gets back down below 20,000, you'll have a lot more selling coming in. I think a lot of people have taken out loans against their Bitcoin, which they hadn't been able to do in the past. So you have a leverage bet now among the hodlers. I think when the margin calls come, there's not going to be a way to meet them. You're going to have forced liquidation. There's not going to be anybody to take the other side of the trade. It's not like you got a bunch of shorts in Bitcoin that are going to cover. It's just going to fall into a vacuum. The whole market is going to implode. The losses are going to be horrific.
There are a lot of people there that have taken out a lot of leverage against their Bitcoin trades. And as we know, when that happens, it can cause a collapse very, very quickly and very, very suddenly. So what's your answer to that, Alex?
Well, we again, I'm not talking hypotheticals, right? I mean, again, we have 1.5 million customers. Like you said, they hold over $25 billion worth of digital currencies, mostly Bitcoin. And when I give you facts, these are facts from the community. It's not some hyperbole from what this person thinks or that person thinks. So we don't see much leverage in the system. And the recent drop rate, by the way, from 69 to 60 was all liquidations on people who were on margins. So meaning there's almost no margin left at that 55 to 60,000 level.
I have a hard time believing that all of the margin debt somehow has been liquidated on the move back to 59,000, that now
You can
there are
see
no
that
more
on
people that have
exchanges.
debt on
This
their
is-
Bitcoin. There's no way that that's the truth. Bitcoin is the ultimate confidence game. It
All
has
right,
no
so
value.
Peter- all right, so Schiff was correct on Celsius. I give credit where credit is due, and he does seem to be correct, saying that margin calls will trigger a sell-off. But do you think that this now can create a cascade of collapses and bring down Bitcoin to zero?
First of all, that was hilarious because literally every single number or fact that Alex Mashinsky stated there was false. From his customer numbers to liquidation levels to leverage in the system, like literally everything he said was false as usual. So that was pretty funny. As far as Schiff, he's just wrong about a lot of things. I mean, if you were to tell me that all of the things that have happened in the last few weeks was going to still leave Bitcoin in the high teens, as far as, $16,000-$17,000 per coin, I would be just elated. You would think that it would go way, way worse than this, given the giant hole blown in these balance sheets, the uncertainty about one of the biggest players in the space, DCG and Genesis. So I think this is really showing that there is a floor. Our volumes at Swan have been absolutely insane. Just people backing up the truck and buying as much of this, on sale discounted Bitcoin as they possibly can over the last few weeks. So I think that, this is something where people have this perception now that we've been much higher than this, and we've gotten comfortable with Bitcoin being around 40K for a long time, around 30K for a long time. When you see a 1 in front of Bitcoin in the 5 digits at this point, it looks really cheap to me. And, that is not something I could have said back in 2017, 2018.
Granted, there are careless players and they are operating contrary to the ethos of Bitcoin, but that does still impact the core asset. Now, Satoshi created Bitcoin because he saw how broken the traditional financial system is, and he wanted to create a different form of money that can't be debased like fiat. But you have players taking that asset, taking Bitcoin and creating derivatives linked to Bitcoin and spinning off a range of financial products that now compromise the purity of Bitcoin, or at least can, and drive the value down. So the question is, just how far down? You said you're buying Bitcoin at around 16,000. Do you think we've hit a floor here with this current mess?
Can I just interject real quick there? So he created a better money. What we do with it and how that affects the financial system is TBD, but it wasn't intended to create a brand new financial system. It'll integrate into the financial system. This was written about at length by Satoshi back in 2009, 2010, and Hal Finney as well. Just thinking about how some new institutions would get created, but also how Bitcoin as better money would get integrated into the existing financial system. So it's really just a marketing trick of the crypto people to say that we actually need decentralized finance. It's nice to experiment, and maybe there'll be some cool things that are sort of incremental improvements to financial IT or Rails or something like that, but it's absolutely not required for Bitcoin to eat a massive chunk of the global market for store of value, which is about $500 trillion. All
right, well, that opens up a whole other conversation of between store of value and means of exchange. And yes, Satoshi created it to have an alternative to money. And my point is that on top of that idea, you have all of these players that have piled on traditional financial system protocols and derivatives and are perhaps corrupting the purity of the core asset there. A core asset which you said you are buying at 16,000. Do you think we've seen a floor here with this current mess then?
Yeah, it depends on what happens with Genesis and, if anybody important kind of gets blown up because Genesis blows up, or if we get a surprise and, we find out the hole at Genesis is more than 1 or 2 billion and it's more like 4 or 5 or something like that. You could see much more ripple effect there. It's still really hard for me to believe that you would see Bitcoin go below like 13,800, which was the weekly close back in December of 2017, and the high in June of 2019. If you remember, there was kind of like a spring summer mini bull market back in 2019. So this seems like there's kind of a lot of volume traded right around there historically, and a lot of people would just kind of, I mean, forget about back up the truck, like sell the house and buy if Bitcoin goes below 15. So
is there a level that if Bitcoin drops below, Cory Klippsten starts to get concerned?
Not really. I mean, I think that we humans, enough of us understand what we've discovered and what has been invented with the advent of Bitcoin. And I think that the truth will win out.
Okay, again, we're going to expand on that. But I know some of the Kitco viewers are watching and going, who is this guy? You know, why is he different from Mashinsky at Celsius? So why is he different from SBF at FTX, for example? FTX aside, explain what differentiates Swan from other financial companies in the crypto sector at large. And I know that Swan is Bitcoin only, but to differentiate why Swan should not be seen in the same light as these other companies.
Yeah, so we're purely Bitcoin financial services and technology company. You can check us out, swan.com. And we only deal in Bitcoin, none of these crypto scams. And it's all about using Bitcoin and understanding Bitcoin truthfully. So we promote self-custody. We teach people how to take self-custody. We teach about multi-sig custody. You can also leave it with us, but if you leave it with us, it's stored in an individual trust account at a regulated custodian. It cannot be moved. It cannot be commingled. It legally can only be moved and accessed by you when you're ready to take possession of your Bitcoin. So, you know, I think historically about 50% of our users have taken their Bitcoin off platform and about 50% have left it with us. We don't charge for custody. Withdrawals for Swan are free, and you can even set up automatic withdrawals. So as you buy Bitcoin, you can automatically trigger a withdrawal to your self-custody. So the whole point is not to gather a bunch of AUM. That's a misunderstanding and a misuse of Bitcoin. So if you are dealing with a platform that is enticing you to leave your coins on their exchange or leave your coins with their service, there's a very good chance they're doing something nefarious with it out the back door. That's exactly what Celsius was doing in June. So, we cut their announcement that I think was an accidental brag that gave the lie to the whole thing when they said they'd taken $500 million of customer funds out of Anchor protocol, which was part of the Luna Ponzi scheme, just before it collapsed. And it was like, wow, you guys are essentially being used as a bank and promoting yourself as an alternative to banks. And yet you're gambling with your customer funds like this and taking one-way directional bets on actual Ponzi schemes. It's really frightening. And then a couple of days later, Mashinsky was on YouTube and Twitter recruiting new deposits and claiming that Bitcoiners were responsible for 30% of Bitcoin being lost because they promoted self-custody. So instead, you should all deposit your Bitcoin with Celsius and I'll take care of it for you. And meanwhile, he was gambling it and lost it all.
All right. Well, Mashinsky, not here to defend himself on what you said there, to be fair, but let's go back to Swan and Swan Bitcoin.
Yeah.
And what is your business model then? How does Swan make money?
Yeah. So we mostly traditionally it's been just a brokerage model. So we just sell a lot of Bitcoin and we do that both in the Swan app and on the swan.com site. For retail users around the world. And then we have Swan Private Client Services. You can check that out at swanprivate.com. So that's thousands and thousands of family offices and high net worth individuals and companies around the world. And then a couple of months ago, we launched Swan Advisor Services. So you can check that out at swan.com/advisor. And this is for the wealth channel in the United States. So we work with a lot of medium and large registered investment advisors and financial advisors and help get Bitcoin into their client portfolios.
Well, if those regulators have their way, that may be a bit of a challenge to that particular side of the business. But
that's not going to happen. That's not the advisor market is not going to be affected by this stuff. I could see them exerting some pressure over pension allocations, and that's probably not the worst thing, frankly, given how irresponsibly they've invested in companies like FTX and Celsius. But I don't see that happening in the wealth channel.
Okay, but essentially you charge a transaction fee every time somebody buys Bitcoin.
Yeah, that's right. So transaction fee on the retail and Swan private. And then we have a platform fee charged annually on the advisor side, and much lower trading fees there because they tend to like to actively manage a little bit more.
And how does your transaction fee compare with other exchanges? Well, you're not an exchange, but with other
We're not
platforms that
exchange.
people
Yeah,
use to purchase Bitcoin.
Yep. Yeah. So basically we're 99 bips, so 0.99%, which is lower than most of the crypto apps and slightly higher than what you would see on a crypto exchange. So you get much better service, you get Bitcoin only, you get the education, you get the community, you get the events, you get kind of a lot better signal. You get a place that's actually safe to send your friends and family, where they're not going to get scammed and accidentally buy Bitcoin Cash or something like that instead of Bitcoin. One of the reasons that we started this is because I was just so personally offended when I went to the Coinbase homepage and there were 13 calls to action before buy Bitcoin. They're trying to get you to do 13 other things before buy Bitcoin. This was a couple of years ago. And you'd see things like you would go 9 months without the word Bitcoin being tweeted by Coinbase. So they're really actively marketing these scams and providing exit liquidity for the pretend venture capitalists at places like Andreessen Horowitz to dump on retail and, again, dumb institutional, rather than promoting the only true thing that's going on in the space.
Okay, so again, I'm going to need to come back to Coinbase there, but where do you source your Bitcoin from?
Yeah, we get it from OTC desks and exchanges globally. So we kind of have access to global liquidity, and it's all connected by API. We don't actually have to touch Bitcoin at all. It's all just connected on the back end, and it goes directly from the liquidity provider straight to our customers.
All right, but essentially you're encouraging people to get off any exchange, to implement cold storage or other forms of storage. And you're encouraging people to hodl, to hold on to their Bitcoin with dear life. So what does that mean for you in terms of volume of purchases? Because if everybody eventually is just holding on to their Bitcoin and not selling, what does that mean for your business model?
Yeah, well, we humans have an annuity, right? We have essentially a fixed income stream, which is our salaries and our earnings over our life. And so we get customers that just essentially match their fiat income and to their Bitcoin purchases, and just decide some amount that they're going to buy every day, every week, or every month, and match it to their earnings. And then we have a lot of people, obviously, that have large piles of assets, and as they come to understand Bitcoin, they feel like they are dramatically under allocated to Bitcoin, and they move some of their assets over from stocks, from bonds, from real estate, from gold, and move it into Bitcoin.
But if this all plays out as you see it playing out, why would anybody sell their Bitcoin in the future?
Well, at some point, basically what happens is once you've been in Bitcoin and buying with conviction for 8 to 10 years or something like that. So think about people that came in and with conviction and bought in size in 2014, 2012, something like that. These people have seen astronomical price rises, and Bitcoin becomes 95 to 99% of their net worth, and that's all they have to spend. They want to send their kids to college, they have to sell some Bitcoin. They want a car, got to sell some Bitcoin. You want to buy a second home, got to sell some Bitcoin. So it's natural that people have to spend some at some point. I think there was a point I should have made in your last question, which is just kind of contrasting the crypto exchange model versus this Bitcoin only financial services model. Essentially, if someone is interested in crypto a little bit and doesn't really understand the difference between Bitcoin and crypto, by definition, they're likely to just be gambling, and you're only going to see them put something like 1% or 2% max of their net worth into this industry or into this portfolio slot. What you get with people who really understand Bitcoin deeply, you want to buy what they gain conviction. You're going much, much deeper into the wallet. So you have people that are going, 20%, 50%, maybe even just living on Bitcoin in many cases, and just taking their paycheck in Bitcoin, and they've converted everything to Bitcoin. I don't recommend that for most people. It'd be somebody that really, really has a lot of conviction. But what it results for us is that we can serve people extremely well with great service, lots of personal touch. And because people actually have conviction and they buy a lot more than sort of the crypto gamblers, even though we are almost all, it's way over 99% buys, almost no sells. And even though it's only one asset, our average revenue per user is a lot higher than Coinbase.
All right, but what are you thinking when you see an exchange like Coinbase, which is depending on transaction fees, and everybody's now, well, not everybody, but many people are panicking now. They are pulling the money off exchanges. What does that mean, do you think? As someone, again, who has predicted the fall of several players, what does it mean for Coinbase as an exchange and others?
Yeah, so I don't have any information that's, again, privileged here, but just observing what I've seen over the last few years from Coinbase and Binance as well, the much larger exchange that's kind of international, is they seem to be playing the casino game correctly, which is just being the house, taking a rake, and not joining in and becoming traders and not being big gamblers. So they have small venture arms that make illiquid bets on startups, both Binance and Coinbase. And obviously Binance has a lot more of the scam promotion going on, kind of creating coins and trading them. And they have their own, smart chain or whatever that they centrally control. But again, they're not putting up much capital, and they definitely don't appear to be taking user capital and using it for those bets. So I think they're playing the crypto casino game much more wisely than what you saw with FTX.
Okay, let's get back to the Swan strategy. And on the Swan Bitcoin website, you write the following: dollars have lost 90% of their purchasing power since 1950 as politicians printed more of them. Bitcoin's fixed supply makes it the best way to save your money for the long term. Fair enough, but in 2022, so far, we've experienced inflation at 40-year highs, and Bitcoin has not done very well as a hedge against inflation. It's fallen 66%. Gold, which is considered another long-term inflation hedge, has dropped by less than 5% over the year. It seems to be holding up better than other assets here. I don't necessarily want to go into a gold versus a Bitcoin debate with you here, but what makes you so convinced that Bitcoin in the long term will be a solid store of value asset?
Yeah, so I pointed this out all along over the last couple of years and said that's a false narrative, and that's going to bite you in the butt if you're trying to claim that Bitcoin is some kind of short-term hedge against inflation. It's not mature yet. It doesn't have the market cap required to have less volatility. I think you'll see Bitcoin start to mature as a store of value. We're a nascent store of value today, a speculative store of value. This is people that believe that it will become a large store of value over time, but it's only when it's probably something like, well over $10 trillion market cap, maybe even over $20 trillion market cap, where you start to see some of that softening of volatility, where it actually becomes more accepted by everyone rather than just the true believers, I guess, as short-term savings, right? Where you can actually use it as a cash account. So it's just have some patience. This is a technological revolution on the order of steam power or mass production or the information revolution. It's going to take a few decades.
All right, so you're saying it's too soon to invalidate it or validate it as a store value asset.
Well, what I would say is I think what it definitely is and how you should think of it is in the traditional sense of what inflation means, which is money printing, inflating away the money supply. Mm-hmm. So it is already a great hedge against the fiat system and protection against hyperinflation in your local fiat currency. So we happen to have the strongest of the crappy currencies. The dollar is stronger than all the rest, but almost anywhere else in the world, you're losing value against the dollar and you're losing purchasing power even faster than we are here in the States. And so, Bitcoin ranks higher on the list depending on where you are and what other currencies you have access to. So it's already pretty good in a lot of places, and it'll get better and better versus the Western currencies over time.
It then always brings up the conflict of, can it be a store of value as well as a medium of exchange? Like, why would somebody want to spend their Bitcoin in the near term, at least in the next 2 to 5 to 10 years, if the value is expected to rise so dramatically? Why would I use Bitcoin to pay for anything?
Yeah. And again, I think we just talked about you would want to spend Bitcoin if you didn't have much else to spend, right? So it's got to be a large percentage of your net worth, and it's demand driven. So this idea that was just kind of given the lie over the last decade, and there were a lot of people that didn't understand economics and monetary theory that thought that, you know, merchant adoption is what you had to drive, and then people would kind of adopt it and create this like circular economy. It actually does have to pass through store of value and become a widely accepted store of value before you're going to see a lot of people actually wanting to spend it. So I am hopeful that there will be another large bull market in Bitcoin sometime in the next 5 years. And what you'll see is the people that had conviction and bought in size starting in 2016, 2017, 2018, that cohort, I believe, is probably, you know, 10 to 50 times larger than the number of people that were buying Bitcoin in size back in 2012, 13, 14. And what I think you'll see is that their demand for medium of exchange services will make that use case for Bitcoin explode in the second half of this decade. And that's why I personally, while I run Swan, which is mostly focused on store of value, we also have an R&D group, and we do a lot with the Lightning Network and kind of preparing our company for the future that will have Bitcoin as medium of exchange. And then I also personally invest in a lot of medium of exchange companies around the world because I think some of them will end up winning, and what they're building over the next few years will have a huge market in 2025, 2026 and beyond.
So by 2026, you see crypto winter being over for sure, and we're well into crypto spring.
Well, I'm hopeful that crypto winter is forever and that we're back in another Bitcoin bull market.
Okay, Bitcoin. All right. So, point taken. Bitcoin spring then. Yes. When do you expect Bitcoin to take off, as you're saying, by 2026?
Yeah, I mean, it's been so weird, right? Like, you want to believe that it's a random walk, but all we've seen is these cycles where, it had the all-time high in December 2013, and then December 2017, and then November of 2021. So, are we going to keep on doing these 4-year cycles? I don't think that Bitcoin is going to be a mature store of value until we stop having these cycles, but it sure seems like we're gearing up for another one. I think you'll see, the Fed loosening, and we'll get through and wash out everything that's gone on with tech stock speculation and over leverage in the system. And, provided we don't have a correlation one moment and kind of blow up everything and fiat system completely collapses, if we can kick the can down the road again, it seems like at some point there will be another bull market in sort of all assets globally, and looser Fed policy and all of that. And when that happens sometime in the next few years, that Bitcoin still today being a risk on asset in most portfolios that have the most money to put into something like Bitcoin, it seems like it'll just be along for the ride. In the end, though, it will separate. We'll zoom out and we'll say, oh, that was funny when Bitcoin was kind of correlated to the Qs for a couple of years, because it's just going to leave all these things behind.
Okay, but before we get to this long-term, very pro-Bitcoin future that you're hoping for and forecasting, I want to talk about the near term, and if Bitcoin, in many people's minds, is still very much part of the crypto sector, and a lot of markets are based on sentiment and perception. Perception is reality. We have Ethereum, which is the second largest crypto in terms of market cap. And you have some very, very big concerns regarding Ethereum, which, if that goes down, would surely be very problematic for Bitcoin. But let me outline some of the concerns that you have and then get you to elaborate on them, because you recently tweeted a meme of SBF and Vitalik Buterin, the founder of Ethereum. And basically, the meme calls Buterin the long con prince. So what do you mean by that?
Yeah, so Ethereum is a long con. This thing is sort of broken theoretically from the beginning, trying to pack way too much functionality into a layer one protocol. Bitcoin is the internet of money. And so if you think about that being layer one, the Lightning Network being layer 2, we'll see other layers develop on top of it. And that's how protocols and distributed network architecture actually works. And you talk to anybody that runs large groups or large teams at, Amazon, Google, Microsoft, whatever, they understand this, and you won't find an Ethereum fan in the bunch. Ethereum tried to create way too much functionality at the base layer. They had the perverse incentive of the more that the network got used, the more expensive it was to use, which meant that they couldn't remain on proof of work. And the only other option was to move to proof of stake. But all proof of stake networks are doomed from the start. They can't exist in the long run. They're inherently political. They're basically just fiat. So the rewards from running a node in proof of stake is basically if you have lots of money, you get more money, and you take that money from the people that are actually using the network. And it's subject to politics, and it's subject to controls, and it's just sort of centralizing over time. It's also incredibly complicated to run these things. And so everybody just outsources it to the big exchanges. And, Andreessen Horowitz funded projects like Lido, and kind of just divests their responsibility to help run the network. So this thing is going to be a big blow up in the end. It's just a matter of time.
Wow, a lot to unpack there. So, I get your point that proof of stake does create more centralization, but what do you mean you think that this is all going to blow up? Because there are other use cases for Ethereum other than a currency per se. There's a whole Ethereum ecosystem growing due to surging popularity of dApps and DeFi and NFT and gaming and other coins and protocols that are based off that. So what makes you think that Ethereum will collapse entirely?
If you're not actually decentralized and you can be turned off, at some point you will be. So it's got a bunch of different points of failure, because you can just turn off Infura or kick nodes off of AWS or Google Cloud or wherever they're running, and the thing just shuts down. DeFi is basically fake. So we saw last week, for instance, with Solana, had a bunch of oracles being run by Jump. They were offsides and were going to get a bunch of their positions liquidated, and they just turned off their oracles. And so they basically halted the system so that they wouldn't get wrecked. So it's just kind of it's basically all just theater, decentralized in name only. DeFi is not actually DeFi. NFTs, you actually don't really own anything. All you have is a private key. Well, we've had private keys forever. It's just pointing to a URL of a monkey picture or something like that. And that's why you've seen the OpenSea volume reduced by 99% since earlier in the year. So there's always going to be a new narrative where they try to kick it down the road and keep the thing going longer and longer and longer. So, World Computer, it's ultrasound money, which is a complete misunderstanding of what the entire point of Bitcoin is, which is immutable, has nothing to do with you changing the monetary policy and just deciding, hey, we're going to be deflationary now. Well, just by changing it, you've given the lie to the thing being decentralized in the first place. So obviously you can change that monetary policy in your favor whenever you want. So it's just most of these things that you've just tossed out are really just for gambling, they're for leverage, and it's all very self-referential, because at the end of the day, the only assets that are actually trading on these systems are other assets in that same ecosystem. It's kind of like a snake eating a snake. The worst thing about it, though, is versus say day trading stocks, where maybe it's Pareto principle and 20% of people make the profits and take the money from the other 80%, and the stocks tend to go up over time, at least in US markets. In crypto, it's very different. So right off the bat, you have the insiders and the project teams taking 50% of the value. And then, because there's so much information asymmetry, so many instances of the Jumps and the Alamedas or whatever having special access and special information and being able to hunt people's stops and things like that on these different unregulated exchanges, you're looking at something more like a power law distribution, where 1% of people are actually ripping the faces off of 99%. And you're also only chasing 50% of the pie. So it's really an awful market to participate in unless you're an insider. And the reason that you see so much sort of outsized presence of crypto people in the media instead of Bitcoin people is because they can print their own money again during this brief window, just like online gambling in the aughts before it got its head chopped off. You have this brief moment in time where there's information arbitrage, regulatory arbitrage, and they can print money out of thin air. They can market it without consequence, and they can dump it on retail and dumb institutional and get rich without ever delivering any product that has real world use and without having any revenue, no product market fit. And they can basically buy power and influence and spend money and name stadiums and go to DC and get on TV. And Bitcoin is nothing like that. There are very few people that can actually get slots in the New York Times or go on CNBC. We have like 5 or 10 people that can actually get in the media.
But Cory, I mean, you have FTX, which was a debacle, granted. But by predicting the future collapse of Ethereum, I mean, does that mean that you think all dApps that operate on the network will disappear? If you say that all of DeFi is magic, I believe was the term that you used there, and I don't think you meant it as in real magic.
Pretend magic.
Pretend magic, that's what you said. Okay, so if you think that all DeFi is pretend magic, are you saying that out of the entire decentralized finance, crypto space that we have, there's only room for Bitcoin? Only Bitcoin
it's not about room. So the only one that can survive and remain decentralized is Bitcoin. Everything else is already centrally controlled and is very fragile and sort of easy to turn off or influence. I think you've already seen that with Ethereum since they moved to proof of stake, where I think 75% of the mining right now is OFAC compliant. So they're basically blocking transactions with almost the entire network at this point. I think there is plenty of interesting experimentation going on whenever you get smart computer scientists and a bunch of money going and they get in a room. Like, a lot of times good things come out of that, and it can be fun. And I think it's totally fine for these projects to try to experiment with things that work today. The point is that platform is going to get ripped out from under you at some point in the future. So if you have a good idea and you've been building something on one of these altcoin protocols and it's working fine, you may even have some revenue or be doing something interesting, that protocol will be gone at some point. And if you want something that's actually decentralized, you'll move it over to Bitcoin eventually.
Okay, so what is inevitable is not necessarily imminent, is what one of our guests
we don't
like
know.
to say.
Yeah, we don't know when it's going to happen. You know, I wouldn't short crypto just because it's going to blow up eventually.
But you see Ethereum collapsing. You just do not see a way that Ethereum survives into the next decade, 2 decades, even shorter.
Yeah, I mean, it could blow up in the next couple of years. It could be the end of the decade, could be in the 2030s. We'll see. It just depends. Ethereum needs to survive. Vitalik, Joe Lubin, Consensus, Ethereum Foundation, they need to seek deliberately to be co-opted by the government and by banks and to become basically part of the existing system and to operate as much as possible, try to influence things contra Bitcoin and try to provide an outlet for statists essentially to fight against the rise of decentralized money. So I think that's probably the best way. If you're thinking of like a strategy for Ethereum to survive longer, it would be to just seek to be co-opted by the existing system, because it stands zero chance against Bitcoin in free markets.
Well, there are several reports that several countries, I believe including Norway, that are looking at building their central bank digital currency using the Ethereum protocol. But CBDCs, that's a whole other conversation, which will be our final point in this very long conversation. But what does it mean then for Ethereum? It doesn't necessarily predict its demise if it does become part of the protocol used for central bank digital currencies. Then certainly wouldn't collapse.
That doesn't say anything about, it's just wouldn't be decentralized at all. It would just be something that's controlled by governments. And, you know, something being used doesn't mean that it actually has value. I mean, there's trillions of dollars being moved around on centralized systems, database to database, ledger to ledger, without a token being involved. So that doesn't really mean anything. My guess is that's not actually using Ethereum network. It's probably some kind of like fork and some kind of private blockchain kind of thing. So it's taking some of the code and saying, hey, let's use this for our CBDC, but it won't actually run on Ethereum, obviously.
All right. So Ethereum is going to collapse, and we are in a monetary war, which is where I'd like to go to next, because you've recently written an article titled The Race to Avoid the War. And in that article, you write, Bitcoin is going to win no matter what. Bitcoin is the best money we've ever had. Its properties were purpose-built to enable it to function as the primary source of value, medium of exchange, and unit of account for every human and machine on planet Earth. So break this down for us. What exactly do you mean by Bitcoin is going to win? It's going to beat out Ethereum, as you've just explained, certainly as a form of money. But do you believe that Bitcoin will be the sole or primary currency used by most of the world's population?
Yeah, I do. In the long run, I think it will be. It could be as soon as, 20, 30 years from now, but it could also be something that doesn't happen until the next century. And that's the whole concept of the race versus the war. It's if we win this race, then we never actually have to fight a war being defined essentially as a contra-Bitcoin effort coordinated by the U.S. government, which is obviously underpinned by the Treasury and dollar system, and is the only potential adversary. Not an adversary today, by the way, and it's also made up of people that can become Bitcoiners. But that's the only entity that actually matters as far as coordinating something that could make life difficult for Bitcoiners around the world in this century. And so this idea of winning the adoption race, so this is getting to that intransigent minority of 3 to 4% of the US population actually owning a good chunk of Bitcoin and actually understanding it, being willing to argue for it, go to town halls, things like that. That's why we talk about 10 million Bitcoiners in the United States. But expanding that into efforts around the world, everything that someone can do to shore up Bitcoin's defenses. So working on privacy technology, working on demonstrating its usefulness as a medium of exchange with essentially pilots like what you see going on in El Salvador, things like that. And just making it more and more decentralized and making it harder and harder to attack. While at the same time, Swan's mission and other companies and people like us spreading education, helping people understand Bitcoin, helping them appreciate it, giving them the tools so that they can tell their friends about it and explain Bitcoin better.
Right.
If we win this race, if we run faster than the other guys, then we'll never have to fight the war because essentially America, United States, will be Bitcoin country.
Except that Bitcoin is such a threat to fiat and to central bankers because it eliminates their ability to just print money at will. So it's not likely that they're going to give up without a war. What does this war or confrontation look like? How messy, how bad can it get?
Well, I think it is likely that we win this race without a war because central bankers are humans and many of them are well educated and able to understand things. And I think you see central bankers already understanding what Bitcoin is and what its advantages are over fiat. You have a lot of monetary historians that prefer sound money and wish that there was some way that we could have made gold scale. We couldn't make gold scale in a global economy with a digitized world, but we can make Bitcoin scale. And so I think there's a lot of hope, and I think we just have to do a lot of hand-to-hand combat and win people over one by one and 1 versus 20 and bring these people over to understand the truth.
So you're saying if the adoption rate continues steadily, the Bitcoin standard is inevitable?
Yeah, I think it's inevitable either way. It's just a matter of whether we have a dark period where Bitcoin kind of has to go underground and kind of fight it out. Again, could only be really coordinated by the U.S. government essentially deciding that they wanted to try to eradicate Bitcoin from the face of the earth. They can't do it and won't succeed, and it'll just come back and kind of give the lie to that effort because it actually is decentralized. But it could be nasty for a few decades, and I'm trying to make sure that I don't have to live through that and my kids don't have to live through that because I think it'd be super ugly.
Okay. How ugly can we expect things to get in the very near term, Cory? What do you see? We mentioned Bitcoin's floor, that you don't see it falling below 15, I believe you said. Give me a time frame of when you see us getting out of this immediate sort of crypto winter, Bitcoin winter.
Yeah. I mean, I think it's reasonable to expect that we kind of trundle along here for quite some time. You got to get a bunch more people with conviction, got to get a lot of scared people used to Bitcoin being in the teens or maybe the low 20s or something like that before they start buying more again. Like this could take a while. I don't really, I guess I can just you can look at my actions and not my words. I mean, we're not preparing for any kind of, return to bull market conditions in 2023. We're prepared to spend the entire year essentially with people scared.
All right, but you are preparing for Pacific Bitcoin in 2023. So very quickly as we wrap up, tell us about that.
Yeah, it was incredible. We threw the largest ever Bitcoin only conference on the West Coast out here a few weeks ago. And it was such a great success. So many people told us it was the best Bitcoin conference they'd ever been to. Really looking forward to doing another one of those with all our Bitcoin friends. We're shooting for the end of September this year. We also throw down big time with the Bitcoin Magazine folks in Miami every year. So look out for the Swans in April down in South Beach as well. All
right. I'd be curious to see what sentiment is like in the middle of the Bitcoin chill of 2023.
I can tell you that the sentiment at the Pacific Bitcoin Conference, which literally was the week of FTX blowing up, was wildly positive. People were extremely happy. People were having a blast. Hanging out with other Bitcoiners. Again, the types of people that are willing to travel to a conference are people that generally understand Bitcoin pretty well, and they have a zoomed out perspective. They're looking down on this thing from 30,000 feet, and they're not worried at all. In fact, they're kind of celebrating, again, the collapse of these crypto scams. I don't consider myself a prognosticator. I'm an active combatant. I wanted Luna to go to zero. I wanted Celsius to blow up, and I wanted FTX to blow up. So,
wow. You got what you wanted. That's
and we pay a price for a little while in the short term with the Bitcoin price, but it makes it much healthier in the long run.
Okay. Well, let's see if you get what you want in the long run. A Bitcoin standard in, I guess, by the end of the century, if not before then. Cory, thank you so much. Really appreciate you zooming in and zooming out on this whole FTX, Bitcoin, and a bigger crypto market story. Thank you so much for joining us here on Kitco.
My pleasure. Thank you.
And thank you for watching Kitco. I'm Michelle Makori. Keep it right here.